we are talking about areas we wouldn't invest in Melbourne, in this suburb.
They are seeing rents probably not as good as well. Like, their holding costs are probably pretty high.
What are the 3 worst suburbs in Melbourne to look at?
Melbourne is such a big market.
What can I pick up as an investor with this particular area?
You can't make an overarching statement that a major capital city is bad.
What are the 3 worst suburbs in Melbourne to look at? Yeah, you heard that right. I'm going to go off my wheel a little bit and tell you about suburbs that do not look good and why. The point of this is so you get a better understanding of how to look at a suburb and work out what you should be actually looking for when working out where you want to invest. By understanding what not to look for is one way of actually working out what to look for. So that's what we're going to go through in this episode. Adi, you're the man who's picked the 3 suburbs.
That I would not touch with a 10-foot pole, to be honest.
Ooh, not touch with a 10-foot pole. This is
not even a 12-foot pole, to be honest. This is
brutal.
Yeah, it's just not looking good.
Okay,
and
let me start before you say it.
Yeah, please.
I'm sorry if you live here. I'm sorry if you invest here. I'm sorry that we're doing this because we might offend you a little bit. So that's not the point. It's to try and show you why. And I am very, very thankful to tell you this, that if you have the worst suburb now, if we do this podcast again in 2-3 years' time, you might have the best suburb then. So it could easily change. Let's go.
That's very true. And to be fair though, what the suburbs that I'm about to sort of talk about, it's sort of like an insult because I used to live in one of them.
Did you?
I used to live
Really?
in one of them.
Okay,
So,
cool.
So I'm part of this, guys. Don't worry. It's okay.
Have you invested in any of these?
I have not invested in any of these. We used to live there. My
Yeah.
parents and I and my sister, we used to live here. So firstly, I wanted to do a shout out to clients of mine that I spoke to this morning, Emily and Max. They triggered a thought. They were actually part of this preparation for me. So I had a call with them this morning. And one of the things that Emily said was, the recovery from Melbourne is going to take a lot longer than, what we expect. And I was like, gosh, okay, that's such an interesting way to frame it. I'm like, it is the recovery of Melbourne, because Melbourne is such a big market, right? We just spent, half an hour together talking about the 3 best sort of suburbs and why they're looking really, really good. But what's really interesting is then you look at these 3 suburbs and you're like, gosh, okay, it's actually a completely different story. They're probably not even that far from each other, right? You can probably get to the other ones that we spoke about within an hour drive. So yes. I guess, Emily, if you're listening to this, there are markets within markets. It's not as simple as saying Melbourne or a capital city is not the place to be, right? So I want to sort of frame the next sort of 3 suburbs that I want to talk about in that narrative, because we just talked about the 3 best, but there are also suburbs that you wouldn't go near right now, and maybe in 2 years you would, who knows. The first one is not too far from where my parents live right now. Is called Dandenong.
Do they own?
No, they don't own. Okay. Actually, my best mate, who is coming to Sydney to visit me on Friday, lives in Dandenong. So I am sorry, Nick. You probably don't watch this podcast, but if you did,
we're going to have to apologize to many people individually. Everyone of Dandenong.
Nikki, you too.
Dandenong. I like saying it out loud. It's got a fun way to say it.
It's an interesting one, right? So look,
it's a big area, right?
It is a big area. It's a massive area. It's gone through a lot of gentrification as well, which I think is wonderful. I saw Dandenong evolve over the last 25 years. It used to be a little bit dicey in the 2000s, got a little bit better in the 2010s, and then it looks really nice now. A lot of new buildings, a lot of development happening. Okay. But the reason, Red, that I would be cautious about like going into suburbs like this, firstly, the what we call the socioeconomics of the area is quite low for the price point that it holds, right? So the average price here is about 700K. Okay. The socioeconomics is 1. So on a scale of 1 to 10, it is the worst that it can be, right? So if you think about all the worst suburbs in Australia, this is it, right? As in terms of unemployment rates, their ability to earn income, all of that.
Crime rates?
Crime rates can be a little bit higher as well.
Yep.
So not ideal. Some other red flags I'll mention.
So not only has he told you that your suburb is not going to do well, he's just said that you kind of suck. So Adi, yes, I'll give you his address at the end of
Nick
this.
sucks. There's no one else. Rent to owner ratio. You asked me that question in the previous one, right?
Yes, I did.
This one actually, the renters exceed owners. What? I find that bizarre, right? 53% renters in the area. So
Really?
it is a very investor-heavy market because there's a lot of, and this is the next one,
All apartments.
60% units to houses.
Okay. Yeah.
Okay. So hopefully this is a bit of a framework to be like, okay, I don't necessarily want to be going into markets which are so investor heavy. And not just that, it's also unit heavy. It's a lot of apartment blocks. It's a lot of just big buildings with, the fancy, gyms and the spas. Those are not the markets, especially if it's prevalent across the entire market. I would be cautious about it.
Yep.
The other things that make me a little bit nervous about this area, at a price point of 700,000, the affordability, so the amount of time it takes for someone to pay off their loan based on their current incomes, is sitting at 50. Yeah, I know. It's a bit scary, actually. It is.
Right,
It's
you
actually,
have picked a bad one, man.
yeah, it's a little bit scary. Now, one of the little fibs that I told in the previous one was that I've struggled to find anything that was increasing in listings. That's not technically true because this one is. So this one is increasing in listings. One of the very few that you can probably find in Melbourne. And now that may be because a lot of these investors, they're holding units that are probably just not performing well. They are seeing rents probably not as good as well. Like, their holding costs are probably pretty high because they're still copying all the, all the land taxes and all, whatever it is. It's just the wrong asset to have. It's just a complete wrong asset to have. So I'm not surprised if there's probably a little bit more listings in this area because it's prevalent in terms of the kind of assets that's readily available. The only sort of upside to this market is I can see the vacancy rates kind of dropping quite dramatically, which is kind of like a bit of a juxtaposition. It's kind of like almost contradicts the overall narrative. Having said that, though, in the last 14 months, it looks like, that vacancy rates had started to trend up.
Am I looking at the right or the left?
You're looking at the right. I
Okay,
forget you have like Hawkeye vision. I wouldn't be able to see this. I can barely see it with my glasses now. So
let's dial that up a little bit here, right?
Perfect. Let's do that.
What can I pick up as an investor with this particular area? So it's a unit central area.
Correct.
Melbourne is an area that's going through massive planning changes. That's going to have a lot of new apartments that pop up.
Correct.
The apartment market is so centered.
Yes.
Like I assume if I go to Dandenong, I'm going to see like a lot of apartment buildings, not just one 6-level apartment. I'm going to see quite a few, potentially large.
Yes.
Is it large?
Yeah.
Sort of,
Some large ones.
some large apartments there. There's probably room for more. Do you think
I would
that's
say
true?
so. Yeah, there's some developments happening there.
Yeah, there's some more developments going in there.
Yeah.
It's far away. It's already priced really, really high. I don't see land values particularly being that amazing in locations like this because apartments cost $500,000-$600,000 to build, but they sell for $700,000. So there's no spread there either. There's not much going for this in terms of an investor location.
Correct.
It seems like a good spot for people to want to live, minus the one score from an affordability perspective. It's a renter sort of place. Why are so many people renting in Dandenong? Is it just cheap?
It's cheaper. I think it is cheaper.
There's something there?
There's
The
a
reason why you don't live
large migrant population there as well. So I think a lot of newbies, because I know when we came in 2000, we lived in, I might as well reveal the next suburb, which is Noble Park. We're going to talk about Noble Park. Noble Park's not that far from Dandenong. So that pocket is quite immigrant heavy. I don't think that dynamic has changed that much in the last 25 years. So obviously immigrants coming in, there's a lot of affordability factors and no one's buying their house in the
Is it
first
all
instance.
units in Dandenong?
Largely,
Yep.
very, very unit heavy. Yeah, 60% in terms of that ratio, right?
Yes.
Which is incredibly high. Like most owner-occupier dominant areas, you're looking at like 20% max, right?
Yes.
So
let's unpack this a little bit. I do see some, we've said it on other episodes, that some Melbourne apartment markets may have a small little period of opportunity.
Correct.
But it's not this type of market that you're looking at. You're not looking for a large concentration of Melbourne apartments. You're looking for like different type of apartments in areas where you have some apartments, but it's not the dominant housing type stock. So this is not what I'd look at to invest in as well. So yeah, I think you've nailed it. It's not really an investor-centric location, and there's much better opportunities there. One thing that I'd add, that if Melbourne does well, if Melbourne rises 30%, let's just say, Dandenong will rise too.
Yes.
Like it will rise less than that 30%, but it will still rise. So there's some element of, we are talking about areas we wouldn't invest in Melbourne, in this suburb. But at the same time, we would probably invest in Melbourne more so than other markets right now. We've touched on that on other episodes. So bear that in mind when we're sharing some of this knowledge.
Correct. And I think I'll probably frame this the last time as well. And I know we're sitting down with one of the best data analytics guys very soon. One of the things that he sort of professes and we sort of lean into as well is that everything's relative, right? Every single thing is relative. What's good for you, Red, is probably not good for me. What's good for me is probably not good for Lindsay behind the camera there, right? So there's a lot of things happening, right, which are sort of so specific to the individual buying. Now, is there someone out there where Dandenong, despite the makeup that we just spoke about, works perfectly? Maybe. I don't know. I don't know what that profile looks like, but it is very individual. It is very specific to people. Yeah. At an overarching level, if an investor came to me, right, they're like, hey, Addy, can you help me buy something affordable or something in Melbourne? Dandenong is not going to be like, oh yeah, I've got that market with 60% units for you. Like that's not it.
So what happened to everyone there is Adi just looked up the population of Dandenong and he realized he's going to have, how many people are there?
30,000.
He's going to have 30,000 people knocking on his door being like, Adi,
squeeze
no!
me.
So yeah, now he's walking it back.
That's true.
He's clever. I suggested this topic idea intentionally, and I'm letting him pick it all and just letting him cop the heat here. You're welcome, Adi.
From memory, you sent me this list, right?
No.
You're like, thank you for sending me this list.
I don't even know what's next.
Thank you for sending me this list, right? I mean, to be fair, we're neighbors. Like Dandenong and where my parents live, we're neighbors. Cool.
So you can't go visit your parents anymore.
No, that's right. Or they have to move.
Yeah.
Just not
all right,
to
what's the next suburb? Let's go to number 2.
So next one. Look, I'm going to rapid fire this, Red, because the story is very similar, right? Yep. We've got Noble Park, which is, I literally used to live in Noble Park North, so not very far. Rent-to-owner ratio, not as bad, but it's 40%. So starting to creep into that, too many investors, too investor heavy. The socioeconomics, although better, not as good as well, because it is a price point of 800K. That's the average price point. Oh, that's interesting. Oh no, I misread. I thought it went up by 10% in the last year. That would have been a completely different story. So we have a 2 IRSAD score, right?
Yes, double the last one.
Exactly, it's double the last one. So it's an interesting one, right? So again, units to houses is about 50%. So half the market.
Wait, what suburb are we talking about again?
Noble Park.
Noble Park.
Yes.
So yeah, clarity. Noble Park.
Noble Park, and I made a LinkedIn post not so long ago about growing up in Noble Park and it neither having parks nor being very noble. So that so I don't know how that's going to go down with my with this.
I was about to say it sounds pretty nice. I want to go visit this Noble Park.
That's right. The data narrative is better. Yeah. The data narrative is better than Dandenong, right? So again, it's all relative, right? This Noble Park on its own may not be great, but it's better than something else that's basically its neighbor. Stock is actually reducing in Noble Park, which is a good sign, right? The demand is sort of tapered a little bit, is sort of still. But again, when we talk about relative, we spoke about these wonderful suburbs in the previous episode. Noble Park just doesn't stack up. That's my main thing. So the narrative is not everything is amazing in Melbourne. It's not the all of Melbourne that looks amazing. It's just there are certain pockets that would do really well.
Yes.
Finally, I'll go to Springvale South.
Cool. Okay? Where's this?
Also, it's sort of in the Dandenong area. It's sort of in the the greater Dandenong city. It's sort of like that. That's what
you just don't like Dandenong. Is that right?
Don't listen to him. I'm moving to Dandenong tomorrow. Okay, I live there. I love you guys.
Go on.
Please don't come to my house.
What have we got here? And why?
So I wanted to pick this particular market because the numbers that we spoke about previously, they're better with this one. So again, it's all relative. I'm doing a bit of a layering exercise here. Rent to owner ratio, pretty palatable, 27%. There's only 27% renters. That's great, right? 26% units to houses.
Cool. So
now, the reason I wanted to pick this one particularly, because this is the metric that's worse than the other one. Again, it's all relative. Affordability is sitting at 56 years for a price point of 800K. That is not a good sign. It should not take someone who lives locally in Springvale South 56 years to pay off their mortgage when your mortgage term is 30 years.
Yeah, mortgage belt sort of areas, yep.
Yes, right? So I find that to be quite scary.
Yes.
That's not ideal.
Is it blue-collar workers?
A lot of blue-collar workers, yes. Yep. A lot of blue-collar workers. It's interesting. It's got a very similar, I feel like dynamic, probably not as similar, but similar dynamic to like a Footscray, which I know we've spoken about like previously. What's a similar one in...
Sydney.
Maybe like a Sydney, maybe like a Marrickville. Yeah, maybe like a Marrickville. Yeah. Although I love Marrickville. I mean, that banh mi is unbelievable.
Proven right there.
So I'm not gonna sort of spell out all the numbers again. It's all it's the same narrative, right? The point is we did 3 best suburbs. We've done 3 worst suburbs. There are probably suburbs worse than this, 3 worst suburbs. But it's the research function of
3
what
even
we
worse
do.
suburbs.
Even worse suburbs, that's right. Than the one we did previously.
Let's do another episode. 3 even worse suburbs. Let's get you in more and more trouble. Just have all of Melbourne after you. I think feeding into this actually is
Correct.
I am looking at some of especially the last 2 there that we've gone through. So Noble Park and Springvale South. Springvale South. I actually don't see those 2 as horrible areas to invest in right now. I see some risk in it, and I do see it worse than the 3 best suburbs that we've looked at. And it is a question of relativity. So if you are looking to invest, there's so many options. I wouldn't put this at the top of my list or any there. But I wouldn't put it straight away in the garbage bin either. No. It's just a little bit of the Melbourne story a little bit there. The vacancy rates are decent enough.
Correct.
The stock on markets are not extremely high. And the affordability story that's there, that could play to its advantage in the short to medium term with the rate cutting cycle. Those areas that are more unaffordable are oddly enough going to become a little bit more attractive through that macro cycle. So if Melbourne does well, which we think it will, these areas may do well as well. So the last 2 make a little bit of sense to me as well, where it's just like I wouldn't have it on my list of suburbs to look at. I think that's fair because there's better options.
Correct.
But like I'm hamstringing you a little bit with the topic being like, find me bad suburbs in an area that's got really strong beta, like market movements.
Yes.
And you're trying to find bad suburbs, and we're not just trying to say Melbourne CBD.
Yes.
Don't buy Melbourne CBD. Probably not in Docklands. These are just unit markets. We didn't want just 3 suburbs that all look like Dandenong, because we could tell you that and tell you why. But that's so simple to tell you. Over there, rents are falling really, really quickly. A lot of that migration demand is going away, and that population growth story is meaning that there's downward pressure on rents in inner CBD units. We could have easily told you that, but we wanted to help you unpack how to look at these areas and some of the things that you look for, because it's subtle. Some of these are quite subtle, like what's good and what isn't between the best suburbs and the worst. There's a bit of a subtle understanding between the 2 for you to look at. So that was my key takeout from this, Adi, that you've picked some good things and you've given people a nice teaching lesson.
Thank you.
About how to unpack this. So thanks.
Can I just before we call it, I want to give a shout out to my parents. So Lynbrook is not that far from these areas. Yeah, Lynbrook is where they live, and Emily, if you're watching this, and anyone else who's markets within markets, right? Lynbrook, which is not that far from Dandenong, about 10-minute, 15-minute drive, a little bit further out, has a completely different story. It's so strange. Its IR sat is sitting at 6, right? Its price point is 800K, so similar to Springvale South. IR sat is 6. Renter to owner ratio is 20%. I know Lynbrook. Lynbrook's a gorgeous place. It's got a beautiful park, beautiful lake. It's just got things going for it. Units to houses, only 4%. It's hardly any units. I can attest to that because I don't think last time I even remember seeing a unit there. Affordability sitting at 35 years, right? For an 800K price point. That's healthy. That's not bad in the current interest rate environments.
Yeah, that is healthy, yeah.
And then you start looking at some of the metrics around days on market. It's starting to decline. Stock levels are, exactly what they are. So the point is you can't make an overarching statement that a major capital city is bad. There are better markets than other ones. You're right, Springvale South, Noble Park, not the top of the list, but they're not bottom of the list either. Things can play out differently. Yep. So just keep an open mind when it comes to sort of talking about a capital city that has,
for sure,
I don't know how many people in it.
I think that there's one other lesson to take there from that data set could change for these, for the Noble Parks and the other suburb, Springvale.
Yep.
Springvale South.
He's pretending. He knows who this is. He's the one who sent me this list. Okay? Guys, he's pretending.
It's very subtle. Springvale South. These areas may actually get the flow on. As this area, the nice area, starts getting more expensive, then it could flow through to the next suburb across. So that could change as well with this affordability framework that's there. So In this episode, we covered 3 suburbs that you may not want to be investing in Melbourne specifically to try and help you unpack it. We probably covered the 4th with the apartment story in the inner CBD, but that was a pretty obvious one, but you should be very mindful of that. That's very much at the bottom of the list in terms of areas to look at. Say Dandenong apartments would be near the bottom of that list as well. That story is a little bit scary. The other 2 suburbs is just to show you the subtle difference between areas that look really, really good that we've covered in the previous episode and areas that you may want to pay attention to looking bad, and then you can compare the difference between the 2 that helps you unpack what's good and what isn't and why. But in saying that, the overall beta story of Melbourne is pretty positive.
Yes.
So I can see all of these suburbs doing fairly well if Melbourne does well, which we kind of suspect it will over the next 3, 4, 5 years. I don't think it's going to shoot the lights out either. So Emily, I think she might be right about that. There's no compelling, I'm going to shoot up like Perth did at the moment. I don't see that story there unless something changes, but I do see a solid player as a good property investment location over the next few years. That's what Melbourne looks like at the moment because of the value opportunities that are there, and these areas may benefit from it as well. So
Well said, Red.
Yep. Awesome. We'll leave it there, and hopefully we haven't made any enemies. This was a topic idea that came to us, an audience request. Topic idea that came to us. So we've done it for you. And the rest of the audience that didn't ask for this request, Adi's address is in the details.
God damn it. I'm sorry, Mum.